So for this week, we are going to touch upon two things. One is a famous investor named Vinod Khosla, and he was born in India, and all the way he became one of the leading venture investor in the Silicon Valley. And he was also a legend in founding one of the most important companies in the history of the internet, which is called Sun Microsystems. And he was also one of the inventors of Java language. So that's the first part. The second part is about how energy abundance will become the biggest cap towards the AI technology nowadays. So last week, we were mentioning about the abundance of intelligence in itself and how do we scale intelligence. But for this week, we're going to look deeper into what is shaping the trajectories for AI industries apart from intelligence in itself. So then essentially there are two things that were capping the industry. I think one is the cap on your intelligence. The second cap is on the energy in itself. And for this week, we're going to look at how different companies or venture investors can do to solve the problem relevant to energy. But before we get started, it's the usual sense. We are going to start with this week's deals. And I looked at 9 deals that can be quite interesting. One is the deal with OpenForex, which is the stablecoin cross-border settlement infrastructure company. And what they do essentially is that they use stablecoins as a cryptocurrency, but they can accelerate the speed for foreign exchange clearance. For example, in the past, from one country transferring to the other ones, for institutional investors, it will take you typically several weeks. But then in the case of stablecoins, this will take, let's say, 60 minutes. But then that's on an individual level. But if you put that towards the institutional level, that means we need a system or infrastructure that can support the large amount of transactions on chain on the count of billions. And this is what this company does. So they have nowadays been one of the leaders in stablecoin cross-border settlement, and within 60 minutes, they can secure any deal, any forex deal across the globe. And this is the target, and this is what the capabilities can do in this technology. And this will mean that the stablecoin narrative is essentially shifting from crypto wallets or exchanges to the B2B financial rails. This will become something that's going to be really settling in the financial infrastructure industry. And the second news is on 9Fine. 9Fine, one of my friends worked there, and she was also a researcher towards their bond, I think it was on bond prices, or it was on bond equities. But yeah, so that's essentially a long-term financial data company, and they started about 10 years ago. That meant to automate the outdated traditional finance industries. A very sad truth is that the traditional finance industries has been using 1980s computer systems for quite some time. So what does 9Fine do? So they essentially tries to upgrade the buying, selling, the equity research towards bonds and the debt equities. And they recently raised $170 million Series C at a 1.3 valuation that focused on data extraction for credit and debt markets. And what does that mean? Their company nowadays is trying to streamline the workflow for the majority of debt equity financiers and debt equity companies, and to work on this vertical and to create a vertical AI in professional financial workflows. And this is very smart because financial workflows is one of, I think, is one of the workflows with the highest added value. And usually when it comes to creating a workflow, we tend to come to company that has got higher value that we can retain. So that is why, and 9Fine is trying to step into this industry. And then thirdly is Better Money. It's founded by A16Z's researcher. So A16Z has got a crypto division. Perhaps they are one of the leaders in cryptocurrency. And then one of the lead researchers now started his own company to create the stablecoins infrastructure as well. That raised a $10 million seed round. I think it was just happened today. And the frontier bet for them is no longer issue another stablecoin. It's to build the clearing infrastructure between stablecoins and the traditional financial infrastructure. And then we will come to AI infrastructure. I think there is an increasing trend that we are seeing. Many money will flow into these hardware companies. And so that this means AI infrastructure essentially is going to go very heavy. For example, Mistral AI, they are funding AI infrastructure with debt. They recently secured $830 million in debt to purchase NVIDIA chips and to build their own data centers. So in the past, we're going to say, oh, the model of these AI companies or its large language models company is just a story for high valuation equities. But now it's going to shift towards an asset-heavy infrastructure supported by bank debts. When it comes to bank debts, this will mean that for the majority of these model companies or for these new coming funding rounds, this will be about industrialization and scaling instead of the frontier research. Because they are eager to commercialize themselves. And then coming to part 5 is the Rebellions, which is a Korea-based AI chip company that only focuses on inferences. So what they does is not look at training of a large language model because that's the expertise for NVIDIA. Instead, their primary focus is to be the leader in inference chips, and it is located in Korea. And why Korea? Because Korea is one of the leaders in building semiconductors. We have the SK group, we also have the Samsung group, and one of the possible ways or business model that they can have is to have collaboration in manufacturing between the Rebellions, this company that can do research in these AI chips, and to co-manufacture with SK or with Samsung group. So this is one of the possible ways to run the business. The other one is they can possibly be acquired by Samsung to strengthen their GPU capabilities, and so that they can be less dependent on NVIDIA overall. And then we're looking at another very interesting deal called StarCloud. It's a crazy idea that they are trying to launch 88,000 satellites to space to build data centers in space. And the reason is that when it comes to building data centers, this requires a large amount of power, land, and facilities for AI. And for example, let's say you are trying to build a 7 gigawatts, very mega data center for your GPUs. You will need the government to approve your land. You will need the local council to approve the water usage. You will need enough electricity. So there's probably going to be a separate cable just directly to your factory or to your company. And there is a very critical shortage of that. And this is pushing capital toward infrastructure solutions that previously seemed like science fiction. And NVIDIA and Google, they're already trying to collaborate with StarCloud to be one of the first clients so that they can redistribute their computing not to cloud, not to data centers on Earth, but to data centers in space. One reason is that in space, you can basically have infinite amounts of sun energy, solar energy. And then in terms of the cooling process for these processors and for the higher temperature when it comes to this information analytics, doing this in your GPUs in space, usually this will be very heat up on Earth. So that is why we need a large amount of water. But space has the perfect environment to cool down every single GPU. So essentially, you can keep everything cool at no cost, and also at a very low cost of energy. So that is why I guess there are these kind of experiments on whether or not we can just create space data centers. And then we'll come to topics on distribution, ecosystems, and frontier bets. One is number 7, the Uber, Pony, and very new collaborations. They are going to launch the first commercial robotaxi service in Zagreb. I think it's in Croatia. And this means that Uber company is also trying to beat up Tesla as well as Waymo in building their own robotaxi distribution model. And this is a clear commercialization pattern for technology providers, for example, Pony AI from China, to asset operators, and such as Verne, and to super distribution platform like Uber. And then we are seeing that companies like OneWay, that is one of the best companies in video generation, if they are launching a very small venture fund and a builders program so that they can absorb more talents into the ecosystems. And then we are seeing that these companies are evolving from selling model capabilities to building platforms, ecosystems, and early stage investment funnels. And lastly, to just announce today, I think Fractile is a UK-based AI chip startup. They are in talks with Excel partners, raising $200 million at a $1 billion valuation. And because the UK and Europe overall, they're also trying to find alternatives to NVIDIA company. And we might expect to see more of these competitors or challenges of NVIDIA coming from different countries, no matter it's in Asia, no matter it is in South Asia, and no matter it's in Europe, or in the future, possibly, maybe it's going to happen to Africa and to South America. There will be more of these companies that try to make sure they are no longer reliant on the monopoly of NVIDIA, because nowadays GPUs can be politicized, and if it becomes a political tool, given the current policy by Donald Trump, then we are seeing the dangerous aspects of over-reliance towards one single country. So that's part one. And then coming to part two, today we're going to talk about Vinod Khosla. And he is a legendary investor. Why Khosla belongs to our conversation for today? I think there are several things. First of all, he is an investor thinking in systems. And he always tries to invest in companies that breaks the physical constraints. So for example, there are two types of VCs. One, invest in gradual innovation, and you can get a very good financial return. The other one is to invest in very disruptive technologies. And we have going through that over and over again in the past. And for Vinod Khosla, he clearly belongs to the second type. He primarily focuses on the deep technologies that can create platform shifts. And when it comes to platform shifts, that is not saying we're gonna invest in a very micro SaaS company that can just earn, let's say, a net profit of, let's say, $50 million or $60 million. That's a job for private equity companies. For Khosla, his job is to find companies that can disrupt SaaS. So that is a fundamental difference. And people will link him with Peter Thiel, but there is a very major difference between him and Peter Thiel. For example, Peter Thiel, he himself is a pessimist towards humanity, but Vinod Khosla, he himself is an optimist towards technology and what kind of technology, how technology can bring up with the abundance of human beings and a better human life. So he is a thesis-driven capital allocator, and he sees technology as a tool to rewrite the physical limits. So then, about his history. So Mr. Vinod, he graduated from IIT, which is, I think, one of the best universities, hardest university to get in India. But I do know that maybe it's IIT Bombay that is harder. But overall, he does have a very strong academic background. And then he went to Stanford for his MBA. And he became the co-founder of Sun Microsystems at 27. Sun Microsystems is revolutionary at the time. For several reasons. One is that they were originally trying to build software, but then they realized that to satisfy their software, they have to build better hardware. So that is why this led to Sun Microsystems. And this entirely changed the trajectories for the invention of and the design of lots of let's say GPUs, CPUs, or computer designs or data processors. And secondly, they were one of the inventors of SQL language, as well as for Solaris systems, as well as Java. And at the peak of the times, it was the leader in Silicon Valley, but then it failed after the collapse of the internet bubble. And they were then sold to Oracle. That nowadays Oracle became the owner of Sun Microsystems. So it owns Java language, it owns MySQL. It also owns Solaris language, and but still, we cannot deny the huge contribution Khosla made towards the industry. And he is an engineer turned investor, which means that he thinks in systems, not just products. Some investors, they are very great product thinkers. There are very good financial thinkers, and he is an engineer, so he is a systematic thinker. So just like I said, the Sun Microsystem max a problem at the time is that the platform itself, which is the hardware, is a bottleneck. So that is why they try to rewrite the entire platform. And this success brought to Khosla to who he is today. That means the core principle to Khosla is that if technology and human beings meet a bottleneck, then to solve the bottleneck, that he needs to rewrite the platforms that support it. So he always has a very famous quote that my willingness to fail is what gives me the ability to succeed. So he is someone that sees failure not as something very, let's say, harsh. For example, for Peter Thiel, he will tell investors or he will tell young founders, you should not fail because competition is for losers, and that is what to prevent you from being a loser, you should be a monopoly. But to Khosla, he thinks that failure can bring you succeed. So he is willing to bet on people that failed in the past, but then can still learn really, really fast. And we're going to see that he has a very concentrated bet on transformative technologies, as well as non-consensus and asymmetric upside for many of these investments. So last week we mentioned about the idea of abundance, and to him, he also believes the idea of abundance. He actually wrote an article about the abundance of AI. It is in one of his blogs on Khosla Ventures. Feel free to check it out. It's going to be very interesting to read. Basically, is if we have the abundance of energy and we have the abundance of intelligence, we have the abundance of everything. And somehow Sam Altman was affected by Vinod Khosla's idea, because Vinod Khosla invested in OpenAI in 2019. He was one of the very early bets on OpenAI before it gets so big. And the reason is that he thinks AI will drive the marginal cost of expertise to zero. This means that traditional organizations like companies, like political parties, etc., they will have very different forms than it is today, because expertise will no longer become very scarce, and companies are built upon the expertise or this knowledge as scarcity. So organizations will eventually change because of the lower marginal cost of expertise of AI. So what does that mean? Once he talked about on energy is that the logic of lowering marginal costs of critical resources, it depends on the solar cost curves and battery cost curve and the compute cost curves. So he was among one of the very few investors that looks very close towards the cost curves of many technologies. And to him, I think, which also makes sense to me, that cost curves and these data can show where the inflection point is. Because there are two types of investments that usually comes up. One is narrative driven. So there can be people that drive narratives and they invest based on narratives. And the other one is on the costs. But I know that there will be people that get overly obsessed with this idea of cost and benefit, and that will turn himself into a financial investor purely. So for Khosla, he is not a financial investor. So that is why to him, these cost curves, they are not for financial advice. They are just for indicators of how these technologies are mature enough, and what is the right time for him to bet on one or two technologies. So that is why, based on his thesis, he invests in these very different companies. For example, OpenAI stands for foundation models, and then for companies like Fusion Systems, Commonwealth Fusion System, Fervo Energy, that is about the abundance of energy. Fervo Energy is an interesting case because it's one of the leaders in geothermal technology. So apart from advanced nuclear plants, as well as the fusion technologies that is a bit far away to us, maybe in 10 years' time or 20 years' time, Fervo essentially looks at the geothermal energy that is hidden beneath the earth. And they are trying to increase the efficiency for that so that we can have cleaner energy that comes from Earth itself. And Fervo is clearly the leader in it. It was invested not only by Khosla Ventures, but also by another company called Lux Capital. And if anyone's interested, Lux Capital, LUX, is the leader. I think it is the leading company in Deeptech. So they invest in agriculture, they invest in space, they also invest in these very hardcore technologies in energy. And if anyone is interested in looking into deep tech investments, Lux Capital is something that we shouldn't miss. Okay, so then there can be some antitheses on his idea. For example, fusion will always be 10 years away. It's the same applies to AGI. AGI can always be 10 years away. Number two is that there's going to be regulatory barriers towards the thesis. For example, how do we permit these grids? And there can be huge delays in the interconnections of power plants. And then we can also have this kind of timeline optimism saying that AI demand scales faster than physical infrastructure can be built. And lastly, there needs to be trillions of dollars required before the cost curves invert. And this is already happening. We are seeing huger and huger amounts of investments that is required to scale up intelligence. So I will have a question. If Khosla is right that energy abundance is achievable, how should we as investors think about deploying capital? So that is why we come to the part 3, which is today's main topic on the deep tech bets on energy abundance. I will go through the different phases for investments into this field, the companies that we can watch, and how realistic for certain things, and where can startups grow. So there are 3 core questions. Where is the problem? How should we invest? And lastly, why does it matter? First of all, I think there is a need, or there is an increasing need that we're seeing, is that the growth boundary for AI technologies is the data center power demand, and it's going to double by 2030. And it is growing 4 times faster than all other industries. Even for the internet ages, we haven't seen such a surge in the need for energy. So energy has shifted from a cost line item to a growth boundary for AI. And this will means that in the past, we believe we have abundance of energy, but nowadays we might see we are in scarcity for energy. And this will create conflicts. This will create many controversy issues going on, from pollution issues to even war times, because energy is an essential resource for many countries. So essentially, this growing demand for energy is going to be one of the biggest bottlenecks for our technology. And it is very local and temporal. The real constraint is concentration in regional clusters. For example, we have clusters in Dublin, in Singapore, in Northern Virginia. And how do we connect these data centers in these regional clusters is a huge problem. And for example, in Singapore, in order to resolve this problem, you will need the additional assistance from Malaysia. And this will bring into administrative issues, as well as political issues, and more conversations with them. And then, let's say one day there is a conflict going on in the Maruka, and people will start to say, oh, we'll cut down energy supply in Singapore's data centers. Then what is going to happen? So this will create a local grid capacity issue. And we haven't seen this now, but we are going to see much more energy shutdowns than ever before. And until we have sufficient amount of supply of energy, this will remain one of the core problems. Also, we are seeing a very interesting trend that the hyperscalers like Google, Meta, Microsoft, and Amazon, primarily these 4 major companies, they are now becoming an electricity co-developer. For example, Microsoft, they are trying to build nuclear plants. And for Google, they are having a collaboration with Fervo Energy to advance their geothermal energy access. For Meta, they are now funding 7 gigawatts of new natural gas plants so that they can directly get a natural gas from their investments. And from Amazon, they are now powering a nuclear data center, and this will become one of the biggest moats for many of these companies in the years to come. So in the past, we thought these internet ages company, they only focus on let's say, building the data centers, and for example, for Amazon Web Service or for Google Cloud, but then they are trying to vertically integrate into the energy supplier as well. So in the future, it is very likely that we can see Google having their own large factories or their own large power plants. Same applies to Meta, Microsoft, and Amazon. So in that sense, how should we invest in the current ages? And I believe the core thesis is that this cycle's winner will sell industrial necessity under supply rigidity, not just decarbonization correctness. In the past, energy investments has been surrounding this topic of decarbonization and climate technologies, and but now I think for energy investment, it is not about decarbonization. And Vinod Khosla actually mentioned a very interesting point, saying he does believe in climate technology, but he doesn't believe that climate technology's growth depends on decarbonization or these regulations such as the Paris Agreement. It depends on one thing only, which is the cost of energy in itself. So if we are seeing more climate funds and investors in energy pouring into the industry, it is not for ESG purposes. It is for the sole purpose of lowering the cost of energy supply in itself, and to ensure that their investment portfolios can create this kind of industrial necessity to supply stable amounts of energy. So let's say for an investment committee, what kind of question will they ask? One is, how fast can it be deployed? For example, okay, we have now invested in this new company that focuses on let's say, energy distribution. How fast can it be deployed across the globe, or just say in America, or in China, or in India? The speed of it is more important than frontier research. Secondly, is, does it serve an essential industrial need? Does it directly serve, let's say, to data centers? Does it directly serve to robotics company? So how is that relevant? Number three is the revenue model. Is the revenue tied directly to power delivery? So let's say with every single gigawatts of power being delivered, how much revenue are they getting? What does the cost curve look like? And then does it navigate or bypass the permitting bottlenecks? That depends on the regulations of the region, because when it comes to energy, this will heavily linked to regulations on nuclear plants, on traditional power plants, or data centers. And lastly is can it scale without relying on the microgrid? Because usually the expansion of microgrid in different countries is a very slow process. If it's fast enough, it takes months. If it's slow enough, it's going to be taking years. So can this kind of investment be independent without relying on this public used microgrid? So then, with that being said, there are four common mistakes that people can easily make. One is misjudging the LCOE as the only metric. What is the LCOE? It is the average cost for energy output, and it only measures one thing, which is the cost of production for every one, let's say, watts or gigawatts of energy from the factory. But it doesn't really count into the time of distribution, the cost of distribution, the efficiency of energy transition, the production efficiency, all of these other metrics that will eventually affect the overall performance of the company. Number two is that people, when they mention, oh, we're going to invest in energy, we're just going to bet on fusion technologies. This is a common mistake, because they are very expensive, and we shouldn't just pour capital into something that is still at the frontier last research stage. Because if you think about this, let's say you direct 50% of your capital on energy investment, people will say that's pretty wise, right? But then you say on fusion energy, unless you have a large amount of capital to deploy, nobody will think this is a good choice to make, because the payback period is too long, and also it doesn't really solve the instant problem people are seeing right now. And number three is that people can assume AI demand aligns with decarbonization, so this will easily be a question asked on ESG. People start to look at, oh, how does AI demand is relevant to the decarbonization process, and what does it mean for our portfolio companies? Should we adjust our carbon offset? Should we be more ESG friendly? This is also a common mistake. Lastly, is people over assuming that demand curves don't really shift. For example, data centers, they will have constant amount of demands, and the demand in itself is linear in its growth. But we can sometimes neglect the fact that if it put this as a demand curve, they can shift both ways. And when it becomes a shift in the demand curves for energy, this will change the way people play about the investment games into energy companies. So I think value accrues not to energy production, but actually to the access of power. So that's why there is a priority layers for different types of companies. From the very bottom, I think, is the constraint relievers, which is what is the things that we can deploy at the fastest scale. And I'll mention that a bit later on how do we talk about these constraint relievers and what do they mean. Number two is the compute energy integrators, which is about how we can optimize the data centers or computing centers with the existing capacity of energy. And this is about hardware developments. And then we come to clean firm power. That will be geothermal technologies. And then we'll shift to advanced nuclear technologies. That is not about fusion. It's the current fission technologies, but in a more safer way, or we can build very much smaller nuclear plants. Lastly is fusion and longer duration. So there are different priorities. And I think for the majority of smaller funds, constraint relievers, compute energy integrators, and geothermal can already be enough. And you can, of course, allocate a little bit of capital towards advanced nuclear technologies and the fusion, but shouldn't exceed, let's say, 30% or even 20% of the overall portfolio. So one is about the constraint relievers. What does that mean? There is a news I read about last week. That is, we are currently in shortage for transformers, which is an essential infrastructure usually for power grids to turn energy into usable stuff. And we are in shortage for transformers, for power electronics, for grid-to-chip architecture. And the deployment cycle for these type of companies will be just within 2 years or even within 1 year. So this is the fastest path for your investment to get some revenue. And this can be a very good business to run. People are already trying to look at this aspect. And for VCs that are trying to invest in this space, we are looking at minor returns, but they are going to be very steady. So we can escape from grid power, I don't know, to radiation power or the new form of future technologies. Then I think this totally makes sense. And then we come into Emerald AI. This is a software company. The interesting aspect of it is that there will not only be the need for the production side and for the hardware side. Sometimes we overestimated the efficiency for many of these systems that manages power access. And to have an accurate form of prediction on the grid management, for example, where should we allocate energy more towards? Is it towards Virginia data centers? Is it towards, I don't know, Google data centers in Texas? This is what essentially the software can do. And then for Camel's Energy and for Form Energy, they're also working on storage of energy, which is already reaching a mature phase in China, but something new, I think, going on in the US. And also for Camel's, which is about the distribution grid and how do we make sure that we can optimize for efficiency on grid orchestration. And then I know that investing in private market companies can be a bit hard. So there are 4 stock companies in the stock market that are already doing a great job. Hitachi Energy, they just mentioned, they were the ones that wrote the article about transformer is in a crisis because they undersupplied and underestimated the amount of transformers being needed. But this will drive up huge amounts of profitability for Hitachi Energy. So if anyone is interested in their stock, maybe it's a good time to allocate. And for GE Vernova, they are now the biggest supplier for grid infrastructure. They are building collections with Microsoft as well as with Google already. And then for Vertiv, which is basically about thermal management, and that's relevant to geothermal technologies. And lastly, For Eaton, it is about power management companies that primarily focuses on optimization of software. These four companies are in public, and I believe they can have huge upside with their current stock price. So now we're trying to shift towards the second priority, which is on the compute energy integrators. So just now I said about the very instant relievers. So we can improve transformers, we can improve the software. So now we are saying is that how can we sell solutions based on the integration of power generation with the data centers? So then in this case, there were four companies. Many of them are actually data centers. Khosla Energy, we mentioned about this last week, but this was now at that time we were about scaling intelligence. But then for this week, one of the interesting case for Khosla is that they use flooded gas to compute, and this will bring in with more energy abundance for the company. And then for companies like ECL, they are trying to use nuclear power data centers. What does that mean? So within every data center, they can have a small nuclear fission plants, and so they don't need to rely overly on the traditional large grids, state grids. And for many countries that are in huge scarcity for energy, this is essential. And then Elantium is about flexible data centers, which would turn to the point about energy allocation based on your need. So let's say if we are in need to use some of parts of the data center's computing power, then we allocate parts of the energy towards it. But if not, it's going to the other way. And lastly is the Trax company and Fleet. They work on distributed edge data centers. And then if we look at priority 1, priority 2, priority 3 is about something that can be done this decade. Because overly reliant on fusion energy and to say we have 10 more years to go and we can have very mature fusion technologies, we just simply cannot bet on them. So that is why enhanced geothermal systems is now one of the biggest hope for investors and also for countries in need for energy, because it's 24/7, it's clean, and it can solve the problems on regulation. It is faster to deploy than nuclear, and it's bankable, it's dispatchable. So essentially, it's more cost effective. So just as we said, there were several companies that came into our minds. One is called Fervo Energy. Like I said, they were invested at first by Lux Capital, and then they were invested by Khosla Ventures as well. They're raising at Series DE already, and it's a company that we must watch if you're interested in geothermal. And then I think Zenska is also interesting because we are seeing much more usage cases for AI-driven exploration of energy sources and also for mining sources. Different companies, based on the characteristics, they will use very different AI tools. But basically, the function of Zenska is to identify which parts of your country has the biggest amount of storage of geothermal energy. And I think in that sense, you can accelerate the efficiency for energy discovery. And there are also companies nowadays that analyze in satellite to find which area has oil, which area has gold. And these companies are also raising large amounts already. And their business model is to find gold mines by themselves. So if anyone's interested, you can also look it up. There are already these very cool programs already. Yeah. And then we come to the fourth part, which is advanced nuclear technologies. Why do I put this as the fourth priority instead of the first priority? It's because the small modular reactors, they need 5 to 10 committed orders before supply chain scales. And there is very high regulation barriers towards nuclear technologies, not just on a military scale, but also for safety reasons, because people don't really want to replicate the Chernobyl accident. So advanced nuclear companies, they can have massive potential, but given how hard the supply chain can be, and given the regulations, we put it at the fourth priority. There are several companies working on that already. One is called Kairos Power. They're trying to use a new type of molten salt reactor so that this can be a bit safer. And Bill Gates is backing TerraPower, which is a sodium-cooled energy company that can, I think, have less water consumption. And then we have the X Energy company, Radiant, and Allo Atomics. So lastly, we'll come to the fifth priority, which is what everyone's talking about when it comes to investing in energy in the age of AI. People will directly come to, oh, we need to invest in fusion technologies. Companies like Commonwealth Fusion Systems that built the first, I think one of the first tokamak in the world, Helium Energy and the Proxima Fusion and Type 1 Energy, they require massive amounts of frontier research, and they also required a huge number of capital accumulations. So that is why for every funding round they raise, it's usually in the size of hundreds of millions or billions for the first seed round. And I guess if one of these companies break through, then we are going to have a leap forward of the overall abundance of energy. So you can keep the bets at a very small amount within your portfolio as an investor, and let's hope for the best when it comes to this priority. So then, given the 5 different priorities we have here, there's going to be very different investment timelines. So for example, in the recent 5 years, it is highly suggested that we just stay on the ground and we invest into these interconstraint relievers, integrators, and then for 5 to 10 years, so problems that can be solved within a decade, we can invest in clean firm power, for example, Fervo, and also some early nuclear, advanced nuclear technology companies. And then for 10 plus years, we allocate capital towards fusion technology. So when it comes to the payback period, the payback time, this is basically the timeline. So then why does the problem really matter? Because the upper bound of an AI civilization is set by the strength of its physical supply system. In this case, there will be several types of people that can win in this game. One is the science founders. For the energy industry, I think scientist founders can be one of the most popular people in this field because they have very deep domain expertise, and they are the ones that are very likely to succeed compared with other engineers. And then is industrialists. What they essentially do in this time is they can scale manufacturing faster, they can scale intelligence faster, like we said in the last session. And then we have the regulatory entrepreneurs. There will be people that focuses on energy regulations. How do we respond to that? And as these technologies evolve, there will be heavier regulations towards them. So there will be people that make money by solving problems on regulations. And lastly is people that can structure very complex financing systems. So in this case, there can be very different scenarios in the future. One is that we are going to live in a constrained energy world, and if we do nothing now, we're definitely going to live in this case. AI growth caps at the grid limits, and the scaling law simply didn't work out. The scale of intelligence didn't come to what we expected. The scenario 2 is very likely is that there is going to be partial abundance for some regions and for other countries. And this will depend on huge amounts of geopolitical inequality. And lastly, like we say, full abundance. That means the cost of energy will become as cheap as the computing cost. For example, now the inference cost has dropped massively compared with 3 years ago. I think it's dropped by, some people say thousands or tens of thousands of times. So this is something that is plausible to see. But if energy costs can drop at the same rate, in this case, we can achieve the full abundance that we always hope. So then, where this idea could be run in this class, one is that we overestimated the demand. For example, if AI scaling laws hits a wall, do we really need so much energy? And let's say if anyone creates a new architecture that requires less data And in this sense, do we really need so much electricity? Number two is that what if the algorithmic efficiency outpaces the power demand? So in this sense, like I said previously, we have faster and more efficient algorithms, and this will consume less energy, and this can outpace power demand. Then our investments can have less return. Number three is that geographically speaking, what if the compute moves entirely to the Middle East or the Nordics for oil energies? And this could be a geopolitical issue. If this is the case, then massive investments on a local basis to solve the restraints problem, to solve these clean energy tech firms problem, to solve the problem relevant to advanced nuclear, just doesn't make sense. You just have to centralize everything to Nordics. And lastly is what if the regulation just didn't go as we expected? So this is some of the risks that I can think of when it comes to investing and betting on the energy sector. So then this will lead to a map. Like I said previously about the different layers. So from the constraint relievers, that can be deployed in 0 to 5 years, 0 to 2 years. It can get very fast revenue. I think private equity firms are interested in this as well. Smaller funds are interested in this as well. To integrators, and from layer 3 is to clean firm power. I think for the first 3 priorities, it makes sense to me. And also it has a stronger, a more promising, if we allocate capital by this, the current issue going on with the bottlenecks can be weakened, or we can see partially the solution. But then waiting to 7 to 12 years or 10 years ahead, we need to see breakthroughs going on with advanced nuclear technologies and with the fusion technologies. So for different size of the funds and for different capital that is available, there are 5 different types of company that one can essentially invest in. So so that is why I think when it comes to conclusion is that physics wins. AI expansion boundary is basically set by the physical world. The same applies to the 2000s internet bubble, where one of the biggest constraints is also on these undersea cables. So people will tend to think that in the age of AI, human beings are developing more towards the software side instead of the hardware side. This is partially true. We can see many Y Combinator companies, they just create workflows and better softwares. But then what is powering them is something, I guess, with the biggest chunk of cake. And to me, investing, like we previously said, from robotics to scaling of intelligence, or to edge computing, all the way to energy, ensures that this technology doesn't stop as a better software or just a better chatbot. Eventually, this can scale up into a human civilizational level technology. So that is coming to the end for this class.